All right. So first, quick disclaimer, educational purposes only. We are here to teach you how to read your software, how to spot the advantages, teach you the basics on executing properly and reading your software properly. And then everything else is up to you. It's kind of like buying gym equipment, right? When you buy gym equipment, it's not really up to them for you to get into shape. And what I wanted to do, I was going through some of my old pictures. I want you guys to see this. So this is a picture. Can you guys see that date? 2015. So this is like 7 years old, plus. It's out of an old video that I did way back in 2015, but it was called Fib and Triggerline Reading. Crazy, right? Because the video I gave you guys just a little while ago to watch is called Fib and Triggerline Reading. And your job, right, is to read your fibs and triggers and do it right. And when you do, everything you're going to do is going to be easy, simple. Not saying you're going to win every trade, because you're not, but you're rarely going to screw it up. So I wanted to start with trigger line reading lesson first, and then we'll go from there. So look, here's, and look, it doesn't matter what size chart you use. It doesn't matter 13.4, 21.3, 34.5. This is a 24.6 from way back in 2015, but it doesn't matter. Okay, it's all the same. I want you to really understand this. And can you guys see this? I'm trying to blow it up big. When the trigger lines cross, there's going to be a couple things that you're going to see, right? And ever since literally, look, in 2004, our trading plan was pretty simple. Wait for fibs with divergence and then sell a pullback to trigger lines after they cross. You remember that? From, if you've been around since 2004, you remember that. That's pretty darn simple, right? It's one fib, one condition, one trigger line, simple. So that's what I'm trying to get to today. In 2015, it was the same thing. It was fibs hold, trigger lines cross, sell a pullback to the triggers. And then there's a couple things, again, I want you to recognize where you are at in the momentum cycle, if you will, right? When the bodies of the dynamic Renko bars are completely below the triggers, small triggers, you have a shit ton of momentum. And this creates our extra wide favorable looks where you're going to do short trades, right? And then eventually the bodies of the bars themselves are going to get inside of the small triggers. And then eventually the bodies of the bars are going to be on the wrong side of the triggers. And then the triggers are going to cross, and then you're going to pull back to the triggers, and then you're going to repeat process. And then eventually, you're going to hit something, they're going to cross, and then you're going to go short again and go short or go short. And then depending, again, where the fibs are, and, you're just going to basically keep repeating this cycle over and over. So nothing has changed in 20 years. Everybody okay with this? That's right. That's a technical term. Is this simple or not? You wait for strong triggers, buy a pullback, hope for the best. Now, we're going to get a little bit more fancy with some rules, but I wanted to go off with this premise first, so that way you can have something simple. So first, again, I really want you guys to spend 5 minutes and watch this video. If you haven't watched it, it's basically everything we're going to do today. So you guys can take the time to watch it. It's on the second or third page on the user guide in the educational section. But the short version is the video is a one trigger line video with fibs and mid bands, and It just talks about whether the small triggers are crossed up or down, or whether they're physically above or below the lines. That's short version. So we're going to do the same thing today when we look at our charts, right? So what I did, just to freak everybody out and try to get your mind in a different place here, I took the large trigger lines and I got rid of them on my chart. Now, if you double click your trigger lines, the multiplier is normally 1.9 for the large triggers. So I'm going to switch it back just so you can see technically they're still there, right? So we still have large triggers. I'm not saying get rid of your large triggers, so nobody trip out and start changing your charts, okay? I just want you to see something in a more simple light. So I'm going to change the multiplier to 1, which means there won't be a large trigger. It's just the small trigger. Everybody cool with that? So I don't want to get too technical, too fancy. So here's your trading plan. Are you ready? And again, by the way, I did upload a new checklist. I made this yesterday for you guys so you can guys can have a copy of this. And we'll get back to this checklist when we start looking at charts and trade setups and stuff like that. So I want you to think one thing, okay? I want you to think, if the small triggers on my 13-2 chart are crossed up, I could maybe take a trade long only. And if my small triggers are crossed down, I can think about taking a short trade. Everybody okay with this? It's the same thing you already do, but I'm just doing it without the benefit of the large triggers. So give me a Y in the room if you understand what I'm saying. If the small triggers are crossed down, you can take shorts. If the small triggers are crossed up, you can take longs. I'm not suggesting you change your charts, but I'm going back to a lesson that I did in 2015 where simplicity wins out most of the time. Now, the other thing is, again, look, the rules don't change. So if your triggers are crossed up, but you hit a red fib, how many triggers are above that red fib? Physically, is this small trigger above that red fib right there? If it's not, fib's going to hold. I'm only talking about the chart I'm pointing at. Yes, Ed. I'm not asking anybody to use imagination here. Just look at my chart. So in this box, there's a red Fibonacci line. Where this arrow is, let's see. See where the arrow is? The small triggers are crossed up, but we're not going long because of a termination condition, right? Because we hit a fib. So if we hit a fib and the triggers roll down, guess what we're going to do over here? We're going to go short if the triggers are crossed down. Now, do you remember that quick lesson that I gave you from 2015? When the bodies of the bars are completely below the small triggers, you're going to have easy trades. Everybody say, yes, I got it. When the bodies of the bars are below the strong small triggers, you're going to have easy short trades. All right. At least 4 people. Since there's 60 in here, I want to see some more Ys. I'm giving you the super freaking easy, simple. That's all you want, right? You don't want anything complicated. You want something super simple that works damn near every time, right? So this is it. You guys, somebody said yesterday, it was like, what's the magic? The magic is easy. Read where your bars are relative to the strength of your triggers, and you're going to be on the right side of stuff most of the time. Now, taking that lesson into account, look, when you're looking at this, tell me where the bars are relative to the small triggers. Are they below the small triggers? If they are, the answer is yes, you take short trades. Now, I want you to also notice, and again, look, we're not going to do away with any rules or anything other, So when we hit the termination condition, right? The yellow 1-to-1s, you just want me to draw a box, that's easier. We have to ask ourselves the question. The question is really freaking simple. What's the question? It's the same question we asked up here when we're reading our charts, right? If price hits a fib, where are the triggers located? The only way we're ever going to trade into a fib or a pivot stop out or a 1-to-1 or anything else is if the triggers are passed, right? Which is what's in this video, right? So this fib and trigger line video I told you guys to watch, the 5-minute one, that's what this video goes through is the location of the triggers. And if the triggers are past a fib, we can take a shot. And if they're not past a fib, the fib's going to hold. I mean, that's pretty simple, right? If the triggers get past a fib, you can take a shot. If the triggers, roll over again, then that's going to be the end of it. So, I mean, this is a really good 5-minute video. Everybody should watch it. Let me go back and watch it later. So when I get to my 1-to-1 and I drew a box down here, I have to ask myself one question. And the question is very simple. Did the triggers get below the 1-to-1s? And if they did, we'll take another short. And if they didn't, we're not. That's easy, right? Now, I want you to also recognize, right? Over here, the bodies of the bars are completely below the small triggers when you're going short. And then this last one, you start to get bodies of the bars inside, and then you get basically the whole body of the bar above. So you can visually see yourself losing momentum as you reach the 1-to-1. Now, it doesn't mean it won't break it or keep going. It could do whatever the hell it wants to do. That's not the point. When you get there, you have to respect it further because of the location of the bars relative to the small triggers. Does that make sense? For example, like over here, let's do the same thing in reverse. Right? This is a situation where the triggers are really strong and they're starting to break a fib, and maybe you take a long trade. Maybe you take a couple long trades, right? Maybe you have to take a trade and manage over here. Isn't that visually simple? Strong triggers, they're breaking above, maybe you take one shot. Now, whether you take a shot or not is dependent on what? I mean, it's really dependent on one simple thing. And in my case, the way I would like to look at it is two simple things. First, again, look, nothing changes. It doesn't matter how far the large chart's passed, as long as it's passed a little bit and you've got a perfect look like this. Does that make sense? I'm going to take a shot at it anyway when the smaller charts are perfect. Do you understand what I mean by perfect? I mean, when the smaller charts triggers are perfect, large triggers, fibs, areas, everything else, I don't care if it's just one little tick past right here. It really depends a lot on what the smaller charts look like before, technically right there, before we get that pullback. Now, I made you guys a little checklist, right? So trend trade checklist. And I'll give you a copy of this here. I'll give you a copy so you can download it. Let me see. Bear with me here. It's been a minute. There you go. I shared a copy with you guys. And you can download it by hovering your mouse. Here, let me show you. If you hover your mouse over the file, there's a little download button. You see that down there? So if you want this, you can download it. If you should really write your own, but if you want something to give you a head start, that'll help you out. Anyway, in this checklist, it says specifically, is the market coming from a good top or bottom, which also includes a breakout? Odds favorable triggers on 13-2 chart. Now, is everybody familiar with what we're talking about when we say odds favorable triggers? And again, this, it really goes back to this simple thought. And again, if the triggers are crossed up, the odds are favorable that it's going to go up until you hit something. If the triggers are crossed down, let me get to some down triggers. The odds are favorable that we're going to go down. Now, I can tell you without looking at the large triggers that if I was to put the large triggers on, this would still look good. You can't have the physical bars outside of the small triggers that are down without having the large triggers look good. I mean, it's almost physically impossible. Look, for example, look, here's a 21-3 chart. You can't have, I'm going to blow this up a little bit. So look, I'll draw a big circle here. You can't have price bars completely above the small triggers for any length of time, and the large triggers don't come along. Do you understand what I'm saying? So, when we say we have odds favorable triggers to go long, we're really talking about 2 triggers, but I don't want to get hung up on 2 triggers today. We're going to do a 1 trigger day and make your life really, really simple. And you're going to add to that the location of the bars themselves below. And it's not that you can't go short with them above, right? So just because you're not, look, the one that's below is your best short to take ever. The ones that are above, you're going to need to make sure that you've got the other charts agreeing with what you want to do. Does that make sense? When the price bars are below the triggers, trade the crap out of it. Sell, 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 sell. Don't even worry about it. Just take the damn 5-1 trade and hope for the best. When it's above, the price bars are above the triggers, you need to make sure that everything is right. And if it's right, still take the trade. I'm not saying don't take the trade, but there's a huge difference between the first one and the second one. They're both good, but one of them's better than the other. Everybody got me? And, look, this is another example of what I would deem a worthy long trade look. So I'm just kind of going forward on the day, and then we'll catch up and we'll look at some live charts and all that stuff. But once you know how to read this, you don't need the class anymore. You don't need me. You don't need Mark. What do you need? Once you know how to read it properly and you know what the rules are, what do you need? Testicular fortitude or ovarian fortitude. Start doing the damn trades. Do them so many times that you're no longer scared shitless. That's a professional day trading term. So many trades that you're no longer scared to take the trades. That's the only way to get past it, guys. Have you ever seen a little kid? Before I go further, I did this because my granddaughter was over here and she was learning how to dive into the pool. And, they stand at the edge and they won't commit to sticking their head in first. You know what I'm talking about, right? How little kids do that. And you're like, just lean forward. It's going to be okay. And they, and then she finally did it. And now 700 dives later in 2 days, she's a diving champion. And it's just getting over that first fear of what's going to happen. How bad is it going to hurt when I land on my belly? Right. And day trading is going to hurt you at first. Everybody lands on their belly at first. because you think you know what you're doing, but you really don't. And then once you actually step back and reassess and take the time to ask questions and read the directions, it's not difficult, guys. The market goes down, the market goes up. If you have a trade, take it, hope for the best. I wish there was something easier than that. Now, is it going to keep going? We never know, right? So we may have some management issues or something, who knows? And then, again, look, we have to look at it in the same light again. And we ask the same question twice. Did the triggers get past the yellow 1-to-1 dots? And I know they were stronger, but are they both beyond or below the yellow dots? No. So, any trade short after that become a little bit more difficult. That's called a termination condition. When you look at the rules on the, hang on. When you look at the rules, right? Rule number 2 says, do not trade into any fib areas that may hold. Well, what the hell does that mean? It just means that you hit something and that both of your small triggers aren't past it. Is that easy? I think it's easy. I'm trying to make it super, super simple because yes, you can look at the large triggers and yes, you can do all the assessment, but it doesn't really matter. It's whatever the small triggers are doing at the spot, usually that tips it off. That's why I got rid of the large triggers for the moment. All right. Now, you guys see this a lot, don't you? Magenta midband. I want you to ask the same question again. Look, it's just simple chart reading, guys. How many triggers are located past the midband? Right here. Tally them up. How many are past? The answer is 0. 0. So this is where we start thinking maybe we're going to roll back down and we're going to start going back down to the downside. Right? We didn't quite roll yet there, but anyway, you get the point, right? Resistance holds. We get below price bars, physically below the triggers. It's a pretty good bet we're going to make a push. And then eventually, and again, look, we're all thinking the same thing in our head, right? We're eventually going to make it down to the fibs. They're horsing around, but eventually they're going to make it and then we'll be okay, right? So we still have to respect, just in case the 1-to-1s hold and the triggers don't get past, we have to stop. If the 1-to-1s hold and the triggers don't get past, we have to stop. If the midband holds and the triggers roll over, we can start going short again. Anyway, long story short, we got pretty damn close, right? In governmental terms, within 300 billion worth away from a fib, one or two ticks, close enough to say we're probably not going short anymore. Now, remember that lesson I gave you guys just a little while ago? The simple lesson from 2015. Here, I'll pull it back up again. We'll do it again, but when you see it, you're going to be like, holy crap, I got it. In the beginning, price bars are going to be below the triggers, and you're going to sell with reckless abandon when the rules are true on the small charts. Yes? Probably. Hopefully. Then when the price bars get above the triggers, you're going to say, we may have support, fibs, 1-to-1s, pivot stop outs, something, but the bars are on the wrong damn side. Remember that lesson? It's the same thing. The bars are below and they're below, and then they get inside and then they get on the wrong side, and then that's it. And it happens over and over and over and over and over. So if you take that simple lesson, right, and you're looking at the bars over here, they're a lot more below the triggers. Yes. So there's a lot more momentum to the downside. When we get to the fib, and I say get to the fib, we were then a couple ticks, so it's damn near close enough for government work. I want you to look at the bar structure itself and tell me what you see. Just where are the bars located relative to the small triggers? The bodies of the bars themselves. We're on the wrong side, right? We're not on the easy side of going long. We're on the difficult side, or going short. We're on the difficult side of going short. So you get within a tick or two of a fib, you have to start going, okay, maybe since we're within a tick or two and the bars are on the wrong side of the triggers, we could maybe make a bottom and not go short anymore. And that's where rule number 2 comes in our trend trade rules. Don't trade into any fib areas that are expected to hold. Well, what does expected to hold mean? It means the bars are on the wrong side of the small triggers. It means the triggers aren't getting past the area, right? Those are the two things that when it's expected to hold. Does that make sense? Because expected to hold is kind of an ambiguous concept. Look, I'll go back to 2004. This was our trade number 2 in 2004. And you're going to see it's the same damn trade we do today, right? We call it a high volume area trade, but you hit a key Fibonacci resistance. Tim, on your chart that you trade. So your trading chart is your 13-2 chart. If you're doing 13-2-5-1. The big chart sets the tone for what you're doing. The small chart's just fine tuning for entries and exits. You're trading the 13-2. So, and again, look, I want you to see the sheer stupid simplicity of this 22 years later. 22 years or 18 years, whatever. I can't do math, but a long ass time ago, we had the same thing. It was fibs. How many triggers got past the red fib in 2004? 0, right? Maybe 1, but that's not really past. And then the bodies of the bars get below the triggers and the triggers roll. And then because you're below the triggers, you go short. Does that seem pretty easy? I mean, it's the same thing we do today if we hit fibs and the triggers roll. So nothing has changed in all these years. But again, when we say don't trade into fibs that are expected to hold, you start adding in bar location and you add a little bit more power to the bottom. Does that make sense? And then as you add a little bit more power to the bottom, you say, okay, where am I at and what's going to happen next? I don't know what's going to happen next. The market went up. And, again, look, this is kind of typical. It made a little bit of a deeper retracement here. If you guys were around, you knew that there was a perfect trend trade right there, right? I know because I was posting it in the chat room. Anyway, this is what it looked like as it was happening. Here's a better picture. I'm going to take a picture. I'm going to post it up to you. And again, I want you to see, my thought process on it. And let's see. That come through? Okay, there we go. Okay, so, well, here. I just can't make anything easy for myself. Hold on. I'm going to make it bigger. I really like saving off the PNG file so I can look at it and say what was going on, right? So at the time before I was going long, I want you guys to tell me what you thought about the triggers and the location to the termination area. Do you see what I see? The triggers are past the termination area, but we're kind of on the wrong side of the small triggers. Do you guys read it the same way? I mean, over here, we were on the correct side of the small triggers. If there was any pullback, it would have been a kick-ass long down here. I don't think there was, but. And as we get up a little bit higher, it's like, okay, the triggers are past and we might have to take a trade, but we're kind of on the wrong side. And again, maybe a little bit of a deeper pullback, right? So, you know, when I was doing the entry, oops, where the hell did that go? When I was doing the entry, I was like, I got to get a really good entry because, you know, I'm on the wrong side. And if you make more than a couple bars down, that's why my stop was so tight. I literally had a 6 or 7 tick stop. Because what happens if I make more than 2 bars down on the 13-2 chart? What happens? The triggers finish crossing, right? I mean, 2 bars down and they start to cross, and then that's it. With 1 bar down, they could technically cross live and uncross live if we finish higher. Do you guys understand that? So 1 bar down is about the maximum you can get away with. And if it goes more than a bar, then, you know, you're kind of outside of your zone of taking a trade setup. Jose, if the 13-2 chart makes 1 bar down, because, you know, the triggers update live. So they cross live, but they don't stay crossed if this bar goes straight back up. So if you have 1 bar down, 1 bar up, they'll be crossed live. But then, you know, the same way this bar looks red, Jose, I mean, that looks red, right? If it closes up, it's going to look green. So, for example, since it just did it, look. Almost every time. There's a couple of exceptions, Tim, in the beginning of a momentum move, but towards the end of a momentum move, more than 1 bar and party's over pretty much. So look, this is the after effect. You see how it, you know, so live, it looked like it was starting to cross down. It pinches. And it's crossed technically in the background, even turns red because it crossed down. But for it to stick, you have to go 1 more bar down. So, and this bar looks down too. See, here's the hard part about trading next gen. Are you ready? When you're going long, this is what it looks like. It looks like it's going down. That's why it scares the shit out of everybody. Because if you don't buy on the way down, you're not actually getting long during a tail. I mean, and you don't really want it to make a down bar, but given the location of the bars themselves relative to the small triggers, it's not a surprise they made 1 bar down, but I didn't want them to make much more than that. Does that make sense? And then after, you know, this bar didn't close down and close back up, the triggers remained up, and then we finished the move to the upside, right? And then ultimately the triggers, you know, look, every time you get to a fib, ask a question. So I'm only going to ask, you know, I'll make it short, but are the price bars still above the small triggers some? And did the triggers get above the fib? If the answer is yes, you're going to take another trade. Right? Which technically I did. That's SP. Hang on. That's the second one. Bear with me here. I'll pull it up. So look, I did another trade with the anticipation. So look at what it looked like over here. Wouldn't you guys say that's a pretty cool look for going? Jose, which way are the triggers crossed, up or down? You only trade in the direction of the 13-2 small triggers, right? So if the small triggers are going up, you might find long trades. If they're going down, you're going to find short trades. So just because you're below a trigger doesn't mean that it won't get back above a trigger. So again, look, we're at 8 o'clock in the morning. I'll get up to the high here and we'll start over from the top. Are you ready? It's not that you can't take a trade, Jose. You have to have these things be true. We never said don't trade if the price bars aren't on the correct side of the small triggers. We've never said that. Ever, 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 not one time. If you ever heard that, you made it up in your brain. This is what you've always heard from us, right? Odds favorable triggers on your 13-2. So do you use large triggers? If you use the large triggers, then you also have to take into account where you're at relative to your large triggers, right, Jose? Not just your small triggers. Now you have to add in your large triggers. I'm doing a lesson to just give you a simple idea on how to read the indicators. I'm not trying to change what you do. Okay. Strong triggers down. Again, look, let me blow this picture up. I know it's a little bit small in here. I may redo the whole thing anyway, but watch. Let's blow it up. I don't want to lose anybody who's new. So if you're new and you're going, what the hell are you talking about? So look, is everybody okay with if the small triggers are going up and the large triggers are going up, you're going to find a long trade? Is everybody okay with that? Just give me a quick why in the room. Now, when you dissect this picture further, right, where is the first spot? Let's say you were only looking at small triggers. Look, just hypothetically, let's say you were only looking at the small triggers. Where's the first place you can go long? Right here, right? So you could literally get long over here, couldn't you? Theoretically, I mean, this is where your trend trades happen, of course, but theoretically, you could get long here. So what would you need to see down here to make that worthwhile? Think about it for a second. And this is where the high volume area trade comes in, right? So I know I got people all riled up on some market flow yesterday, but hang on a second. Why is my man, I'm stuck. Hang on a second. Okay. What the hell? I got stuck. Hang on. All right, bear with me. I had to bail out. 2 seconds. Okay. Going back to what we do here. it's not a matter of being conservative. New people need the most ultra, super, perfect, easy, best of the best look, right? Because you don't have the skill set to determine that this is a great bottom, so I need to go earlier. So this one's like a no-brainer. Nobody can screw it up unless you just don't take the trade, right? I mean, that's the point, Rob. But that's not the full use of our software. That's a use of our software. And again, look, if you guys buy a weight set, right? Let's say you build yourself a home gym and you're 150 pounds and you haven't lifted weights in 25 years since college. And you buy 5,000 pounds worth of weights. Are you going to put all the weights on day one? No, you're going to kill yourself. And it's the same thing with day trading and analysis and charts and different things. If you put 22 things on a chart, you're going to overwhelm yourself and you're going to get crushed. Right? Haven't you guys had that crushing feeling trying to do too much? So this is why we keep it super simple for the most part, because once you have this trade down, you can make a little bit of money. Right? Once you have this trade down, you can make a little bit of money. Now, once you start learning how to read your fibs and triggers and other charts, maybe you can go long at the first spot the triggers roll over. Or maybe you can go short at the first spot that the small triggers roll over. Anticipating, because of the location of the bars relative to the strong small triggers, that if you came off of a fib, you're going to get this money too. Gary, I've watched you for a long time now, a couple months, and I'm like, why didn't you take the first one? You know, I've told you that a lot. It's like, it's a top. Why don't you take the first one? And people will get in on this very last trade way over here and skip all the first easy stuff. Why is it easier? Because the bars are completely above super wide small triggers. And you have to have a perfect termination, which brings us to, rules. Like, let's just say, for example, this is the crude oil from this morning, just to be fair. So 8 a.m. I'm talking to everybody. I just call out names. Look, because of the multiple red fibs, is everybody okay with this? This is why you pay us the big bucks right here. Because you know that there's a bunch of red fibs here, how many triggers are past that red fibs? Zero. Zero triggers are past the red fibs. Well, you can wait to go short until it's over here. But is that really the best use of knowing that this is the top? I mean, if it's really the top and it's really not going any further, is getting in over here the best use of our software? That's the first one that's probably ultra conservative with nothing in the way. Which is still cool. You can, and that's, Rob, what we were talking about. We're going to get you making some money with these so freaking stupid, perfect, easy looks that you're going to hopefully be brave enough to take a couple of them and everything's going to be okay. But, again, you have to start thinking a little bit out of the box, right? When you do one trade and you can do it well and you're starting to get comfortable with your read of the software, can you do two trades? Right. So, that's why we put together like a checklist like this. I mean, look, if you have a good trend trade, the checklist, right? I added in favorable triggers on the 8 range because that's what I like to see. And then what about the checklist for a high volume area trade? Make sure that all your charts have a good top. No triggers get past the fibs. the triggers roll over, wide, small triggers, or both, but at least wide, small triggers. And if you reach a target before you get in, don't take it. That's pretty easy, right? I mean, that's not rocket science. So where would something like that be used? Okay, look, I'm going to clean up my charts here so we don't have any. So look, do you see this spot over here? I'm just going to draw an arrow and a circle. That's the kind of spot where if the fib top holds and the triggers roll, I know there's a HV up there, MB. I'm not doing this blind. So look, MB is one of our very well-versed high volume area traders. So look at that spot. You see the pink line right there? Again, look, the pink line gives you a spot to go short before everything rolls over after you know it's a good top. Now, there was more shorts to be had. I mean, right, just reading your triggers and as you go along, but doesn't that look a little more advantageous than just, you know, one trade way over here? And look, that's not a bad trade, right? This is, here, watch. I'll turn on the large triggers. So look, there's two high probability trend trades. There's this one. So, you know, this would have been an HVA short. So that's, you know, again, if you're not into that yet, then that's not your trade yet. So cool, right? And then after a good top, can you do a trend trade short into fibs? You know how you're looking at it and you're like, holy shit, termination condition, I can't do it. Tell me the truth. You're like, oh my God, a blue line, I can't do it. Right? Tell me if I'm wrong. All right. So let's think about what we talked about this morning and the lesson that we talked about from 1997. Where are the price bars relative to the small triggers? Absolutely, Rob. Perfect call. The more they're above and the wider they are, the more chance you have of busting through whatever's in your way. You know, we had a trader in here, Jerry. Everybody remembers Jerry if you were around, but his number one saying is strong triggers break things. And it's not just strong triggers, it's strong triggers and strong trigger line location of the bars. So when you look at it from this perspective, right? So here, look at it this way. Where are the bars? How strong are the bars? How strong are the triggers? And then how good was the top, right? So it's a three-phase approach to getting the most out of our software. It's not just one thing. Yeah, well, it's scary because there's a blue line there. So you have to have weapons, you know, of chart reading and analysis to say, you know, look, what are the chances that this look is really going to stop right here and go straight back up based on, you know, the location of the bars and the strength of the triggers? The chances are damn near zero. I mean, there's always a chance of anything happening in trading, but for what we do, this is really, really good stuff. And then look, we get the same thing here. You're inside of, right? So, You know, if you're not looking at the small triggers, now we're inside of the large triggers. So this is technically price bars below your large triggers and the first pullback to your large triggers. Right? So you get price bars below your small triggers in your first trend trade. Oop. What the hell? Oh, I know. I have a hotkey in there. Okay. Right. So price bars below your triggers, and then you get your first trend trade, and then price bars below. They're above your small triggers, but it's the first pullback into your large triggers to create your second trend trade. So it's the same pattern. Look, I'll give you a 21-3 chart right now. Strong triggers below, and you get your first short trade. And now where are your bars relative to your small triggers? They're not quite so far below anymore, are they? And this is a 21-3 chart, and it's still very much down. But do you guys see what I'm saying? How the price bars themselves, now we got to basically make this little deeper pullback probably. And then, you know, this will be our line in the sand right here, one way or the other. Looks like it's leaning to the downside. But it's that first one that's better, in my opinion. It's the first, you know, the high volume area is short because of the area. If you're not into that trade, cool, I'm fine. Can you go short into fibs? Hopefully this is a helpful technique for you to visualize price bars 100% below wide small tricks. And hopefully that'll not scare you as much as it has been in the past. How's that? Is that a good way of saying it? All right. So let's take a look at our 13-2 chart, right? Because look, nothing's changing. And you could do this all day, every day, right? So you get another short here, and then what happens? Just take a look at where the price bars are. See how the triggers get inside of each other, which you already know that that's a anything can happen trigger. But you add to it price bars on the wrong side of things, and then you get your pullback or deeper retracement. Now, same thing going up. Small triggers up. Can we go long? Probably so. The large triggers remaining up tell you you're not going short, probably, unless you hit a really good fib. If you hit a really good fib, then you can start going short more assertively right there. I don't know what was up here, but we'll go take a look at it. All right, questions. Now, the second part of our checklist, let's go through it together, okay? Are you ready? I'm going to clear all this off of here. So let's start with this up here. Does everybody understand the concept of, is the market coming from a good top or bottom? Are you coming from a fib area? Are you coming from a spot that may hold? Right? A good fib top, good fib bottom. Now, once we have that, you know, look, you have to have strong triggers on your 13-2 chart in order to do a trade. Nothing has changed. Just because I gave you a lesson on where the price bars are, it doesn't say refer to John's price bar lesson, does it? No, it says, are the triggers strong? Do you have favorable momentum? So now you have an extra tool in your toolkit, right? To determine what extra You know, if there's a tie, the tie goes to the runner, right? If there's a tie and you're deciding whether you're going to take a trade, maybe the tie goes to whichever side of the triggers you're on. If you're below them, you can take that short. If you're above them, you won't, right? Odds favorable triggers on the 8 range. What the hell does that mean? It means the exact same thing that you guys have on the 13-2 chart. Here, look. Let me build a chart. I'll build an 8 range chart for you real quick. 2 seconds. All right. Can you guys see my chart? So what's odds favor? So we'll go back to where we were talking about, you know, the great top and urchin trade shorts. Odds favorable triggers. What are they? What does odds favorable triggers mean? So, you know, we had trend trades that we had already marked up, obviously, but if you have a great top, where are the price bars relative to the triggers? So when MB was taking his high volume area short up here, give me your read on where the bars are and what the triggers are doing. Is that a favorable trigger line look after a good top to take a short? Just knowing what you know now about the triggers and bar location and whether they're crossed. You don't have to know rules or anything else. You just, where are the triggers? Where are the bars? Are they crossed down? Are we below them? If you have a reason to go short, take a short. That's pretty easy, right? I mean, that's not rocket science in any form or fashion. And then when the price bars were 100% below our small wide triggers on the 13-2 chart, we were wondering if we were going to trend trade into fibs. Right? And Douglas said that was one of his issues. So let's try to ascertain, if we can, number one, now that you know that the price bars are completely below the 13-2 small triggers that are wide, which adds a lot of power to it, can we confidently and accurately say what these two triggers are doing and where we're located relative to these two? I think that's a pretty damn favorable look. What do you guys say? Tie goes to take a short. So that's all I mean when I say, do you have odds favorable triggers on the 8 range? So let's go forward and figure out when we don't have odds favorable. Is that another cool thing? Let's try that. So here, I think we have odds favorable triggers for your high volume area short. Here, I think we have really good odds favorable triggers for a trend trade short. Here, I think we have odds favorable triggers again for another short. One more short, odds favorable triggers, and then look what happens. Number one, we also hit some stuff on the large chart, but you see how we're losing the odds favorable triggers over here? It's over. All right, Jerry. Yes. So look, we had a great multiple fibs up here, followed by triggers rolling over, sell a pullback to the triggers. Tell me, look, somebody call bullshit on me if I'm wrong here, but isn't that the exact same trade we've been preaching since 2004? Hit a fib, triggers roll, sell a pullback, make some money. Hit a fib, triggers roll, sell a pullback, make some money. If the triggers are going really strong, do some trend trades. When the triggers lose their favorable momentum, stop doing trend trades. That seems easy enough, doesn't it? Here, look, live S&P. Let's assume we made a bottom. I got to go look at all the charts, but let's just look at the triggers, okay? Don't look at anything else, just the triggers. This is where the triggers change. Smalls are getting above the large, yes? And then eventually, we retest this high volume area line a couple times, which is, you've seen that before. And then odds favorable triggers. Don't look at the bars, look at the triggers. Small and large triggers are going up. That's a very odds favorable trigger line look. Still technically is. Not sure if you go long anymore at the edge of resistance, but still very odds favorable trigger line look. The problem is you're at the edge of resistance. I'd have to look at my other charts to get a sense, but if you were only trading with the 8 range triggers, could you have made a little money? Here, I'll make your life easier visually. This is what I mean by odds favorable momentum on the trigger lines. Everybody give me a yes, no, you understand, don't understand. And then look, after a pullback, look at how the odds favorable momentum takes off again. Above the small triggers. There was a saying that somebody once said that said, never, ever, ever exit a trade when you're above your small triggers and it's going up. Just wait for the target. Now, I know you guys are trying to take 10 ticks and you're so happy to get 10 ticks, but that's not the best use of our software. If you're on the momentum side of the small triggers, you need to get a little more money out of it. $200, not $100. Anyway, long story short, triggers. All right, so let's take a look at what we have here on crude oil. Again, I don't know. I don't have all the information, but if there was a reason to take a long trend trade here, that would be odds favorable triggers. Everybody cool with that? So it's the same thing that you read on your other triggers. But look, price bars completely above wide small triggers. Pull back, find a long trade. It's not the 8 range, Rob. It's price bars versus the triggers. Triggers versus the triggers. Watch. I'm going to go 55 range chart and 30 days back. Now, how many of you guys trade a 55 range chart? Nobody. I know. 55 may be a little big, but it's the exact same thing. It's reading fibs and reading triggers. So, if you had fibs down here and you were waiting for odds favorable triggers, right? That would be it right there. That's your first one. Everything's still up. Everything's still up. Everything's still up. This is where you finally lose momentum on this move. You're starting to lose momentum over here. If you were going to go short on crude oil on a 55 tick chart, 55 range, which we won't, but that would be the spot where you have odds favorable momentum with the triggers down. Right, Rob? That's the price bars below the triggers that are going down strong. And this is the spot where you go short. Look, I want to put this into perspective for you. From there to there is $1,600 for one contract range. Just from there to there. $1,600. That's a lot. So, again, you can use any chart you want. There's, you can use a 21 range chart. You can use a 13 range chart. So here's a 21 range chart right now, which we don't normally use, but can you spot where the favorable momentum is for us for going short? I don't know, what happened at the high, but we get below all of the triggers. They cross down. The first pullback to them, somewhere around right there is where the party really started, right? And you don't trade a 21 range chart. It's not a matter of which chart. It's a matter of how you read the chart. That's why I can pull up Bitcoin. I could pull up Ethereum. I could pull up NASDAQ. I could pull up Tesla. I could pull up any damn chart on the planet. And as long as you know how to read it properly, you'll know what to do with it. All right. Now, this is what it looks like on a 5-1 chart. So it doesn't look the same, does it? Right. So, look, at some point you have to say to yourself, look, I'm going to pick a chart. Hang on a second. Okay. Can you guys hear me okay? Just making sure. At some point, you're going to say to yourself, I'm going to trade this chart, and I'm going to do it because of what? I'm going to do it because of the triggers, right? So let's get back to our little 13 range chart thing. 13-2 chart. So what do we see, guys? Yeah. Now, if you do take another short, it's probably the last one, right? You're on the wrong side, but it's okay. You can still go short. It depends on what the other charts look like. So think about this, Rob. At this spot up here, does the checklist play out? Do you have favorable triggers on the 13-2? Yes. Do you have odds favorable triggers on your 8 range chart? So look, remember we were talking yesterday. So look, I'll show you the spot on the market flow chart. So here's that spot on the market flow chart. So at that time, what do you guys think? And you missed your entry? I'm not sure how, but so remember we talked about the market flow giving you a signal and you can get in afterwards. Just saying. We had a good example of that yesterday where I was trying to get in at a price and then I got to sit, I was trying to get in, like, for example, I think I was getting in, I had one tick above where it actually got to. And then I was like, damn it. After it made a signal, I was able to get short. I didn't mean to do that. So I had a limit order here and it missed. And then after the signal, I said, hey, I need to pay a little extra. And I got in right there. Yeah. You don't need to learn the market flow, Rob. You need to learn how to read your triggers and when your rules are true. The only time you need a market flow is if there's a reason why you need a signal to start your entry. All right, so look, now I want you guys to answer the ultimate question. When did we run out of favorable trigger line momentum on just the 8 range chart? See how we started to fade out over here? Now that's still 20 ticks. So from 94.20 down to 98. No, we're still going down. We got to the fib, and who knows where we're going. But so look at this now. So this one had odds favorable momentum on the 8 range chart to help out. And then this one didn't. Damn it. Darn it. Sorry. Come on. Oh, I know what it is. Stupid. Snag it. Okay. So this one did not have help with the 8 range chart. This one did. Now, answer the question quick, guys. How many triggers are past that fib? You got to be quick. 0. Now, is it a bottom that's worthy of buying? I don't know. We'll find out in a minute. But because remember, rule number 2 is if you run into red lines, you have to also judge where your triggers are. So let's just say we hit mid bands and fibs here. Having the triggers break above this is going to be the key to the next long trade if we take one, right? I don't know if that's going to break or not. But I know that that's a bunch of lines, and unless the triggers really get above it, then it might hold. Does that make sense? Seems pretty easy, doesn't it? So yeah, the triggers are going up. Yeah, the bottom held, but we ran into a bunch of red lines, so there's no reason to go long. What's one of the other things that we want in our trading rules? We want room to the target, right? That's rule number 2. We don't want to have hit a termination spot. Mid bands or red fibs or mid bands and red fibs. So if it may reverse the market, we don't want to go long into it. You know, and look, this is where some people would go in and say, you know, I need a little bit more information, right? And they use a bigger chart to see if they can get any extra information out of a larger chart. So you guys tell me, if you were to add in the power of termination spots on a 21-3 chart, what do you think? Probably not yet the best long trade, huh? I don't mean to confuse anybody with an extra chart, but so let's just say it doesn't matter. We'll take it anyway, okay?
Order pending.
I missed it. We'll take it anyway and see what happens. Triggers are up. We'll go long. If we make down bars, we'll get out. Fair enough? Now, for me, this wouldn't trigger far enough past, but I want you to see it's okay to lose. This one should lose. Do you guys understand why? It's probably going to lose because the triggers aren't really past the area. I'll take it anyway, and we'll manage it with a divergence if we get one. Now, can I ask you another question as we go forward? Remember where I said odds favorable triggers help us on the market flow chart? What do you guys think? Odds favorable triggers? Hell yeah, they are. Now we're running into a bunch of resistance, which is really bad, but so I'm going to cheat and get to break even. I mean, I could still make it lose a little bit just so you guys can see it. Can you guys see it okay? But look, we're running into resistance and my small triggers are going down. The first time up, right, the area said, yeah, it may go, and then we get a shot at it. And then now we're at resistance, and how many triggers are above that resistance right now? Right now, literally. Oops, sorry about that. None yet. Now, it doesn't mean it won't go, could. But see, this is where, look, it's okay to take a little less money. This is, you know, medium probability trades that, in my opinion, the smaller two charts helped out a lot. The market flow chart helped a lot. I'm trying to get it together for you here. Sorry, I have these things on multiple monitors. Now, did I know it was going to win? Hell no, I didn't. There's no way of knowing it was going to win or not. And again, look, once you get up $300 on a trade, it's okay to take $300, right? Anyway, I just got out of it. So look, this is what I'm talking about when we talk about a checklist for your 5-1 chart and odds favorable momentum. So I'm just giving you this for your checklist if you want, okay? Odds favorable triggers on the 8-range chart. And it didn't really have much to do with the market flow, Rob. The fact that there's a white bar down and then a signal up had nothing to do with it because it didn't influence my decision to take a trend trade. You understand what I'm saying? It was just odds favorable triggers helping. There, I'll share that with you. And again, look, you know, when you look at it after the fact, you can see the reason that we decided to at least take a stab at it was because the triggers were getting passed. So we did have a good bottom. I mean, we had fibs with divergence, which is cool. But the reason that we finally said, hey, let's try to pop one is because the triggers got passed. It's that simple. Yes, Paul, they're gone. I got rid of them. We're just doing a lesson trading with the small triggers going up or down, since technically that's all you're supposed to do anyway. Yeah, I did record today, so if you guys want to go back and watch it, the censors will probably get me for language, but you know, nobody said this was PG or G rated. It's day trading. If you get morally offended, please raise your hand because we're going to know. Day trading's tough, guys. And, you know, again, I try not to use bad language as much as I can, but every once in a while it slips out. All right, guys. So, look, we had talked about this one. I know it was fast, but look, this is the last one that had odds favorable triggers going down. And then we had odds favorable triggers going up on our market flow chart, 8-range chart. The market flow didn't have much to do with it, but so look, here's those two spots. What do you guys think? That spot in that spot. Maybe it's a coincidence that there was a white paint bar into it and a signal to go short, and a white paint bar into it and a signal to go long. Maybe it's coincidence. But if you needed a signal to go long, you certainly got one. But again, confirmation costs money. Do you need confirmation? If the triggers are that wide, do you really need an invitation to sell resistance on every chart? If you do, then you got to really question, what the hell are you thinking? Why? Why would you even think not to sell that? Do you really need confirmation to go long at fibs when your triggers look like this? Is everybody 100% clear on what I'm talking about when I say odds favorable triggers on an 8-range chart? Right on. And then look, no termination conditions on the 13.2 has to be true still. And we talked about the 13.2, and we'll talk about it again. And we were talking about, I'll pull up a chart. We were talking about how right here, it wasn't good enough because the triggers weren't past any of those lines. It's like, you know what I mean? So it started out, we were talking like, yeah, we're probably not going to go up. And then, you know, a few bars later, we changed our mind because the triggers actually were, look how much further up they are. You see that? Now, what if it lost 10 ticks? So what? Look, can I ask you a question? Watch this. If there was no lines on your chart at all and you only had triggers, so you didn't have jack anything else, nothing to scare the crap out of you. Are you ready? So you knew this was a fib at the bottom, and then you had this trigger line look. Does that make it a little more comfy for you? I love a good inside of the large triggers. So you have to ask yourself, is it the lines that are scaring you or your inability to read the momentum and strength that's scaring you? The lines shouldn't scare you. The lines are your friends. Everything that you're going to do, good, bad, or indifferent, is going to be based on triggers. Without the benefit of anything else, are we going up still or not? Would we take a long trade or not? Well, let's see if we have odds favorable momentum on our 8-range triggers. Do we still have odds favorable momentum on our 8-range triggers? Or is it fading? It's fading. Now, it doesn't mean that it can't stop right there and go up. I mean, that's kind of like the last spot, but it's fading. Look, one of them is damn near guaranteed where we went long. The next one, if you had a trend trade, would have been damn near guaranteed over here. And then this one says, hey, it sucks for you because you're on the wrong side of your small triggers that are crossed down. Haven't we already learned what happens when we're on the wrong side of our small triggers that cross down? Now, it doesn't mean we won't go long again, right? I mean, you know, this is where maybe you get down to a lower area. I'm not saying go long. That's not what I'm saying. You understand what I'm saying? You may get down to a lower area and then say, hey, it's worth a shot, which I don't think it is, but I'll get out of it. But you can see it's going to the lower area, and I'm not going against the trigger, so it's just a bad idea. Triple divergence on the 5-1. All right. Now, look at how bad that looks. See, this is what happens when you start thinking you know what's going to happen and you start doing crazy stuff. Is there any reason to go long right there? Raise your hand if you've done it in the past. You said, I know those fuckers are going up from there, so I'm going to go long anyway. I've done it. I promise you I've lost a lot of money doing that. It just... it just chaps your ass, and then they stop you on the low, and then they finally go. So look, what's a smarter play, guys? I know we don't talk about this a lot, or Mark doesn't talk about it a lot because he keeps it very simple. What's a smart... If the large charts say we're going up and everything says we're going up and everything's still going up, this is where, you know, we've incorporated the this one. Now, I want you guys to look at this picture, and I want you to think about this picture for just a minute. And forget about rules and forget about labels and forget about everything else, okay? We're just going to use common sense from 2004. The number one thing is that you have fibs that are going to hold, right? Do you remember the trade from 2004? And you'll see how silly this is because it's the same. It's been the same thing forever. Once you get your mind wrapped around it, something snaps. So look, in 2004, 18 years ago, you hit a fib, your triggers roll over, and you sell a pullback to the triggers. Easy. Put your stop above the pivot high. Same thing we do today. If you hit a fib, now, how are you going to get in using these triggers? Well, you're not, right? The fib should hold because of the trigger line location, right? So bad top, not from an area. Now, using your newfound knowledge about trigger lines and the first time they cross over and where the bars are relative to those triggers, does that continuation long look a little bit easier to you now? Not that it can't lose, but if you look at where the bars are relative to the first wide triggers going up and you bought a pullback inside the triggers, if there's a fib here, it'd be better, 1-to-1 or something, or a mid band. But that's all you're doing with our software is what's the top or bottom. If the trigger lines roll, try to get the first one. And if you miss it, wait for a trend trade. Right? I'm just looking at my S&P, and it looks like you guys are going long S&P again. Did anybody get long? It just looks like we went back into odds favorable mode again. Anybody get along on the S&P? I think this is a fib, so that's probably your target. Anyway, here. I'll show you the 13-2 chart. This will make a little bit more sense. Long trade. And then that's the end of the party for the moment. All right. Anyway, Rob, do you understand what I'm saying? It doesn't matter what chart you trade. It matters fibs and triggers. Fibs and triggers are everything. Divergence is cool, but that's more of a management tool more than anything else. So when you think it's going to still go up, look, you can go long when the triggers are going down and the price bars are below them, but that's what we call financial suicide. Wouldn't it be stupid to go long when you're totally below every trigger line and they're going really wide? I mean, I think it's not the best use of the edges. Anyway. Now, that's a continuation style entry, and I'm not saying you should do them or you shouldn't do them. I'm just saying that's what it is. Let's just say hypothetically we were going to wait for the triggers to roll before we went long so it didn't look so stupid. See anything better than what I did over here? And again, I did on purpose so we could see the visual of it because it looks awful. Everything's going your way. Everything's going against you. Now the fibs hold on the big chart and then the triggers roll up and then we're going back up again. Anyway. All right, Paul, let's see what you got. That was the S&P long I was just talking about. Very, very, very nice. Perfectly done. Textbook, 100%. All right, I'm going to go back and look at your pictures now. Gary, same exact trade. 100%. You're on the MES, so you don't have exactly the same thing, but cool. Very well done. Abe, this video changed your understanding of the market flow. Let me see. Which one was this? I gotta see. Oh, yeah, this is a good old video here. All right. You guys can watch this video. Y'all save that off and watch it. It's an old video, but again, it's just, this is the waiting for a signal trick. And look, you don't have to wait for a signal if what? If you have odds favorable momentum on all of your triggers, you don't need a confirmation. All right, Adam. All right. Okay. So you got in on the way up, kind of momentum style. And then after the third divergence, you didn't really get out, didn't protect yourself. All right. Did not keep raising my stops because they're in great places. Yeah. You know, the problem is with this, Adam, as the divergences start getting tighter and tighter on each other, they're going to come down here and stop everybody out. I mean, that's just what they do. Divergence and a pivot stop out with double divergence. I mean, that is a termination condition, right? So I think this last one might have made you protect a little bit. And then you can do the continuation after, but anyway, I understand your logic, your thought process. All right, guys. So crude oil. I guess I need my fibs back on there, don't I? I hate flying blind without some fibs. Did we run into the fibs? Do we want to take another long trade? What's the answer? If we ran into the fibs, then we're probably not taking a long trade. So I do need my fibs on my chart. Let me put my charts back together. Are you guys having fun today? All right, let me bring my chart back over. All right, so here we go. You know, that's pretty damn close, but for me personally, I wouldn't be taking that. And it may go, but you know, coming off of 1-to-1s exactly at the high at a fib is not really super beneficial. So for me personally, I would call this a termination condition. I can't spell. Right, 1-to-1s and a fib, that's party over for me. And I know it's on a small chart, but we also have fibs over here on the large chart. So that would break the tie. Now, if we wanted to go a little bit further, and you know, what about our market flow chart? We had divergence from fibs. How many triggers are past the fibs on our market flow chart? Not much. So, you know, if we were going to go long, we'd probably wait for a signal. But I mean, I wouldn't go long, but I'm just saying if we're in a different situation. Looks different now, doesn't it? You guys can do what you want with your trading, but when you hit 1-to-1s and fibs like that, for me, anything that goes above that, we'll rethink it. All right. So there's nothing to do at the moment, is there? That's the way it looks to me anyway. Now, what normally happens when you make a strong push up like this? You guys talk about this with Mark all the time, right? You get back towards the mid band, and then what happens? You start thinking about that second push back up to the upside, right? Not saying it's a long trade. I'm just saying it's not a short trade because of the mid band after the first push to the upside. Let me show you in the manual where this stuff is. It's very, very simple. Trend defined by trigger lines. So this is in the second section. And look, this is the typical, we went through this yesterday, right? If the first push is strong, a lot of times they make a second push. And then when the triggers are below on the second push, you get a better top or bottom. It doesn't have to happen. They can just hit and go. And if they just hit and go, then you've got to, you know, then you've got to adjust as warranted here. All right. I'm going to leave you guys for 5 minutes. If you guys have questions, comments, concerns, things you guys want to go through, hopefully this trigger, you know, fib and trigger line reading lesson has been very helpful for you. Really going back and starting now to study where the price bars relative to the small triggers and the strength, where are my trade setups. And then, you know, if you want to add in a third chart, like an 8-range chart, to give you an extra check on your checklist, not a bad thing, right? So again, if you have odds favorable triggers on an 8 range chart, it usually helps out the decision to take a 5-1 trend trade because of your other charts. You don't have to have this, right? There's nothing that you have to do. There's nothing that we're telling you that you have to do. We're just showing you different charts, and it's the same read no matter what market, no matter what chart, no matter anything you ever do with NextGen. If you trade Tesla, if you trade Apple, if you trade, short expiration weekly options, which sounds like a lot of work, but it doesn't matter what you do. Forex, crypto, regular old currencies. If you want to trade bonds, if you want to trade another market, if you want to trade bigger charts, if you want to swing trade it, it doesn't matter. It's the same exact read. Once you get the read right, you can do anything you want. Until you read the software correctly, your fibs and trigger lines, you're going to be floundering around a little bit. So, I really, really highly recommend that you guys make that a prime focus on what you're looking at. Yes, Karis, I will post that. And I did record everything that we've done up till now. So I'm going to stop the recording real quick. I'll repost that little check sheet if you want to use a copy of it. So hang on, I'm in the recording.